Hello, today for our live session we have Peter with us. So, Peter, as the week is about to start, what's the mood in the markets?
Well, we make a start with Friday's American session, and that tended to provide also continuation into Monday's Asian session. On Friday we had a US dollar which edged a little bit lower. It was very characteristic as practically it edged lower, yet overall the sideways movement of the US dollar index was maintained. So there is a position of anticipation on behalf of the market for the greenback. I would note though the financial releases from the US, among which I would highlight the preliminary S&P Global PMI figures for July. And we had the manufacturing sector, which the indicator dropped, implying a slowdown in the expansion of economic activity in the manufacturing sector of the US. But I think the most characteristic release was the services sector indicator, which dropped considerably. It dropped below the cutoff point of 50, which more or less tended to imply that we have a contraction of economic activity in the US services sector. Overall, I would note that the market has started shifting its attention towards the Fed's meeting that's on Wednesday. And I would also like to note that the US dollar weakened, yet that provided some, I would dare to say, some support for gold's prices, which tended to rise. Also note that the 10-year yield on Friday dropped a bit, which more or less polished the shiny metal even further. Last but not least, would be a comment about US stock markets. We had Snap's earnings report, which came out on Thursday after trading hours. And the report was quite adverse. It created substantial worries about the practically net advertising sector and whether that's going to have a substantial effect also on high-tech companies which are to release their earnings reports in the current week. Say, for example, like Meta Platforms or Google. And that tended to drag down US stock market indexes, which also tended to maintain a rather worried sentiment, cautious sentiment within the markets.
So what earning reports would you single out today?
Well, today we would be singling out Vodafone practically. I know it's across the pond, it's in the UK, but it's also listed in NASDAQ. So we may see Vodafone capturing the interest of traders and could create some volatility. But the main body of releases is expected tomorrow, Tuesday, on Wednesday, and on Friday.
Okay, and how about oil prices?
Oil prices have been dropping. There are some worries about the demand side of the commodity. I would dare to say that the expectations, the market expectations for the Fed to actually tighten its monetary policy in an aggressive manner have also as a byproduct the possibility for an economic slowdown or even a recession, which could have an adverse effect on oil demand. So we saw oil prices, especially WTI, dropping. That would be practically for Thursday, Friday, and during today's Asian session.
What's on the calendar for today?
It's rather quiet, but still, we would be highlighting Germany's IFO indicators. And both the current conditions indicator is expected to drop, as well as the economic sentiment indicator is expected to drop. And that would imply practically that we have a deterioration, or if you prefer, more pessimism regarding the expectations of the market for the German economy, which is the largest economy in the Eurozone. while at the same time the conditions on the ground are deteriorating on a month-by-month basis. So that's not exactly positive news for the euro. Most probably it could weaken the euro somewhat. And from the UK, I would also be noting the CBI business optimism and the CBI industrial orders. They are for quarter three and July respectively. Should we see the indicators readings drop, we may see an adverse effect on the pound as well.
Mm-hmm. What would you single out for the week?
We have a number of financial releases in the coming week. I would be highlighting, okay, let's make a start with the Fed's interest rate decision, which is the main release for the week. The Fed is expected to hike rates by 75 basis points. Mm-hmm. There are some slight expectations also for a full 100 basis points rate hike, but our base scenario remains at 75 basis points. However, we would also expect a hawkish forward guidance by the Fed. That, combined with the rate hike, could provide some moderated support for the US dollar on Wednesday's American session. I would note, though, that the possibility of a full 100 basis points rate hike could cause considerable support for the greenback. As a second release, I would be noting the preliminary release of the US GDP rate, the advanced GDP rate. That's for quarter two. May I remind you that the quarter one release was at minus 1.6% quarter on quarter on an annualized basis, showing practically contraction of the economy of the US. The forecasts currently for the preliminary quarter two rate are expected to show an acceleration and the rate getting slightly over the negative, which could ease market worries somewhat regarding the possibility of a recession in the US economy, but may not be as convincing as expected. The third release would be the preliminary HICP rates of France, Germany, and the Eurozone for July. Now we have some slightly conflicting messages here, as forecasts for the German rate are for it to tick down to 8.1% year on year, while the French rate is expected to accelerate, as is expected also Eurozone's preliminary HICP rate for July. Overall, though, the big picture is that inflationary pressures in the Eurozone tend to remain at high levels. And should that be the case and should be verified by the release as such, we may see the euro getting some support, as that would imply practically increased pressure on the ECB to proceed with a 50 basis points rate hike in the September meeting. The final report, which I would note, would be the preliminary GDP rates for quarter two of the Eurozone, Germany and France. Once again, those are to be on Friday, and they're expected to slow down. Should that be the case, we may see the euro weakening, as that would practically imply a slowdown of the expansion of Eurozone's economy, practically flashing some caution here, some caution signals, especially for the ECB. Overall, though, I would like to also note the downside potential of the GDP rate of the Eurozone for quarter two. It's the preliminary release and it's expected to draw considerable attention, as it's the first figures coming out for quarter two. Finally, on Wednesday's Asian session, we get from Australia the CPI rates. There for quarter two, they are expected to accelerate. Mm-hmm. And given that RBA has been delivering consecutive rate hikes in the past few months, an acceleration of the CPI rate would be signaling that more hawkishness would be required practically on behalf of the bank to tighten its monetary policy in a more aggressive manner. And that could provide some support for those.
Mm-hmm. And any final comments for today?
It's Monday. I would like to see how the market sentiment will be, especially about US stock markets. Will the cautiousness which was expressed in Friday's American session be continued also in today's American session or not? Should we see a continuation, we may see US stock markets dropping. I would be highlighting the high-tech sector, which seemed to be suffering most in Friday's American session. We may see that being expanding or extending, if you prefer, in today's session.
Thank you, Peter. Stay tuned for our next live session with Peter.
So welcome to the technical analysis part of the presentation for today. As usually, we make a start with the US dollar index. It's the 4-hour chart, and all the charts which are to follow are based on 4-hour time frames unless otherwise stated. We make a small comment here. Note how the US dollar index has stabilized. There are even some slight bearish tendencies during today's European session, but nothing convincing yet. I would expect the index to be within the 107.50 and the 105.55. That's unless the index actually bounces on the upward trend line, which, switching now to the daily chart, unless the price action actually bounces on this upward trend line here, which could go a little bit lower actually, somewhere here. Bring them back down to the 4-hour chart, even lower. There you go. Yep. But for the time being, we tend to maintain a bias for sideways movement. Should the bulls actually take lead over the index's direction, we may see the price action of the USD index rising, breaking the 107.50 and aiming for the 109.50. On the flip side, and given that the RSI indicator below the 4-hour chart remains between the readings of 30 and 50, hence we cannot rule out a bearish outlook or a bearish scenario as a possibility. We may see the price action dropping, breaking the pre-mentioned upward trend line, breaking the 105.55 and actively aiming for the 103.20. We would require that, especially the breaking of the S1 and the upward trend line would be signaling a trend reversal and the possibility of a downward motion to be extended. On the other hand, note that even the slight drop noted during today's European session seems to be hitting on the lower Bollinger Band. A Bollinger Band which have narrowed substantially, indicative of the lower volatility for the index. And hence that tends to reinforce our bias for sideways motion, at least for now. Let's have a look now at Euro USD with a similar but reversed picture. Euro USD, which practically revolves around the 1.0210. I would like to make the necessary corrections here. And we could practically, let's make the readjustments. somewhere here. Yeah, because you have also touches, aiming, touch, testing. And I would like also to bring this resistance level somewhere here, where you have multiple touches, making some readjustments here. Let's widen this a little bit. We have one touch, test, and another touch here. Okay, let's keep this. And that would be the S1 at 1.015. So we corrected it in order to reflect better the sideways movement of the pair. And also, let's correct point so high. 5. That's low. Somewhere here, that would be the 1.275. And there are two, which practically was a former support line, but given the downward motion that the price action is below it, has now turned into resistance. And that would be the 1.38. Sorry, 1.038. The release of, let's have a look now, 1.0485, that remains the same. Okay, that should lock in the resistance levels, the first support line, parallel level stays, 0.9860 stays. And we seem to have a sideways motion between the 1.0275 and the 1.0150 for Euro USD. Some very slight bullish tendencies, but practically nothing convincing. Yet we have to note that the RSI indicator seems to remain between the readings of 50 and 70. So for the time being, we maintain as our base scenario on a technical level that Euro USD is going to remain between the 1.0275 and the 1.0150. Should the bulls take over, we may see the price action breaking the 1.0275 and start actively aiming for the 1.0380. We would require a clear breaking of the R1 to abandon a bias for a sideways motion in favor of a bullish outlook. That would also be maybe the first signal that the pair may be adopting now a bullish outlook. On the other hand, should the bears take over, I wouldn't be surprised to see the price action breaking the 1.0150 and start actively aiming for parallel level 1, that's the S2, once again. Once again, we would require clear breaking of the S1 in order to switch our bias for sideways movement in favor of a bearish outlook for the pair. And I would like to see it actively aiming for the S2. We have to note here that Euro USD showed little, if any, reaction to the adverse release of Germany's IFO indicators earlier, 1 hour earlier. And it's characteristic if we see the 1 minute chart. Let's have a look at it. Thread cross, and it's 10:57, 11 o'clock. This was the moment when it released. And then we're talking about 15 pips. That's practically nothing for Euro USD. So overall, that passed on the fly, and it's characteristic that the pair, or if you prefer the market, ignored the negative news as Euro USD continued to rise in the following minutes up until now, which could also be a result practically of a weakening of the US dollar, given that the US dollar index has been dropping as we saw earlier on during today's European session. Once again, sideways bias is maintained as long as the price action remains between the 1.0275 and the 1.0150. Let's have a look now at cable. As always, it's the 4-hour chart. Make the readjustments. Cable which is moving in a sideways movement clearly, and we have to make some readjustments. It's nice to see that it respected the 1.2070 which we had set earlier on. Let's widen this somewhere here. See the touch here. It's beautiful, and some testing here. Actually could be a little bit higher. In red, please. $1.330. So we have our new final resistance line, which is being placed at 1.2330. The second resistance line, which is being placed at 1.2175. First resistance line, which is being placed at 1.2070. The first support line, which is being placed at 1.1935. And the there we go. Once again, we maintain a bias for a sideways movement, this time between the 1.2070 and the 1.1935. It's characteristic how similar the movement between Euro USD and GBP USD are, showing that both seem to be currently USD driven. And it's understandable given that on Wednesday we have the Fed's interest rate decision, and Thursday we have the US GDP rate for Q2. This is a preliminary release. Should the bulls take over, we may see the price action breaking the 1.2070 and aim for the 1.2175. On the flip side, should we see the bears leading the way, we may see the price action of cable breaking the 1.1935 and aiming for the 1.1815. It's characteristic that, or if you prefer, it would be a prerequisite for us for either of the pre-mentioned levels to be broken in order to switch our bias for sideways movement in favor of any other direction. Let's have a look at USD JPY. USD JPY, which has been dropping, and it's interesting to see and compare the movement also with USD CHF, another safe haven. So let's make the corrections here. Definitely these two support lines are now being turned to resistance line. We haven't visited the pair for a while. Let's go hunting now for new support lines. Let's open this up, unlock it. Note how it had found some support, some resistance here. We could set up a new support line here or here or here. I would prefer this one. It's more clear cut, but it's far away from the price action. So given that could be the final resistance line, support line for USD and JPY in green, 131.50. However, I would also like to see another support line in the middle, somewhere here. On the other hand, we could widen this here. Excuse me about that. 129.60. Let's readjust. Always the 4-hour chart. Let's open this up. We're missing too much here. I'm not satisfied. You can see how the narrowing of the price action practically reaffirmed this level as a support line and also resistance line back in here. So I would be placing the 134.70 as the first support line. And I would like to see this also be maintained as a support line as well. Yep. Let's lock this in. $140 being the final resistance line. 138.50. Let's first resistance line being placed now at 136.75. First support line being placed at 134.70. Second support line being placed at 133.15. And the final support line being placed at 131.50. I know that the distance between the S1 and the R1, which is around 205 pips, is quite wide, but may I remind you that the pair has covered such a distance within 1 day. Actually, this movement was of around 236 pips, or another example would be this one, where the price action practically covered 215 pips. So it's possible for the price action to move from 136.75 and drop all the way down to 134.70, sorry. Okay. It also encapsulates the sideways movement here. Note the touches and here the testing and aiming. Seems pretty valid. Also, we have the sideways movement here with some testing of both levels. And then we have the peak, the lowest peak practically in our chart being placed at 131.50. So overall, we tend to maintain. Now that's a big question, whether we have a downward trend line or not. My bet that should be the first thing we saw. Okay, there has been a clear downward movement with a correction even, and then a continuation over the past 2 days. Right? Yep, since the 21st. So it began practically on Thursday's American session, maybe even late European session, and continued with some signs of stabilization today. It's characteristic that the pair has been dropping and seems to have started to form a downward trend line. Should the price action actually obey to the downward commands of the trend line, we may see it hitting on it and dropping, aiming if not breaking the 134.70. Note that this drop after hitting was over 200 pips. Actually, it was around 237 pips. So should this pair drop around 237 pips once again, that would bring it somewhere here. Pretty low, eh? On the flip side, should the stabilization actually take place for the pair, I would expect it to break the downward trend line, yet possibly remain below the 136.75 resistance line in somewhere this area here. We may see it moving sideways below the 136.75. Should the bulls take over, we may see the price action breaking the pre-mentioned downward trend line. Once again, first signal of a changing trend, breaking the 136.75. That would be signaling that the bulls have started to take over. And a clear bullish scenario would be if the pair USD-JPY actually starts actively aiming for the 138.5 resistance level. For the time being, the RSI indicator seems to remain below the reading of 30, actually nearer to the reading of 30. Sorry, it's below the reading of 50 and actually nearer to the reading of 30. Yet I would note that practically the pair's RSI indicator may not have some slight upward movement characterizing it, implying that the bears may be losing some steam here. Okay, let's have a look now at USD CHF and make the comparison. Yeah, in this case, the downward movement is clearer, far clearer. We have consecutive lower peaks, lower troughs, characterizing USD CHF's downward motion, enabling us to draw a nice long downward trend line. We remain bearish, but let's see how low it can get. Let's make the corrections here. Given that the price action has broken the 0.9640 support line and now moves below it, let's go hunting now for a new support line. Okay, this could go lower. See that this peaks here. There seems to be some resistance for this level here. I would go even lower. No, that's too much. Somewhere here. And given that the price action is above it, I would keep it. This is a support line. In green, please. Let's make the readjustment upward. Let's readjust the labels and correct them. So we have now the R2, which becomes the R3, and that's the 98.60 resistance level, the final resistance level for the pair. The second resistance line is being placed at 0.9765. The first resistance line is being placed at 0.9640. The first support line being placed at 95.50. The second support line being placed at 94.55. And the final support line being placed at 93.65. So for the time being, we maintain a bearish outlook. We wouldn't be surprised to see the price action aiming, if not breaking, the 0.9550. Once again, it may seem wide, but it was covered, as evident here and here, within 1 day. So we may see the price action by the end of the day, maybe during tomorrow's Asian session, breaking even below the 0.9550. Should the downward motion be maintained, at least tested. On the other hand, should a stabilization take place, we may see the price action remaining between the 0.9640 and the 0.9550 and definitely breaking the downward trend line. A bullish outlook, we would require initially the breaking of the 0.9640, the breaking definitely of the downward trend line, and the price action to start actively aiming for the 0.9765. For the time being, I would also like to note that the RSI indicator remains between the readings of 50 and 30, which may imply that the bears are still present for the pair. Let's have a look now at commodity currencies. Maybe I'll start with the CAD. USD CAD, which has been moving in a sideways motion between the 1.2935. Look how it tested practically. There was some efforts to break that level around today's Asian session, yet they were fruitless. So the pair corrected lower, once again entering the familiar range for the past 2 days between the 1.2935 and the 1.2835. We tend to maintain a bias for sideways movement as long as the price action remains clearly, or the main body of the price action for USD CAD remains between the 1.2935 and the 1.2835. Should the bulls take over, we may see the price action breaking the 1.2935 and start actively aiming for the 1.3075. It has some beautiful touches here for the CAD. On the flip side, should the bears take over, given also that the RSI indicator has dropped, breaking below, just below the reading of 50, which may imply that the bears could be somewhere near, we may see the price action breaking the 1.2835 and USD CADs starting to aim for the 1.2720. Mind you, it's a commodity currency with USD CAD possibly being also kind of sensitive to WTI prices, given that it's one of the major export products of the Canadian economy. Let's have a look now at AUD-USD. AUD-USD, which, let me readjust this. Okay. Definitely, we haven't visited this pair for a long while. Okay, we corrected the 0.6875 resistance line and is now turned to a support that the price action has been moving above it for the past 3 days, actually since Thursday, maybe even Wednesday. Okay. See how this level provided support a number of times. Given that the price action has moved below it, we will keep it as a resistance line. In red, please. And that would be the 0.7155 resistance line. Let's make the readjustments. The S3 is now being placed at 0.6715. The S2 being placed at 0.66. The S1 being placed at 0.6875. The R1 being placed at 0.6995. Double touch here. The R2 being placed at 0.7070. And the R3 being placed at 0.7155. Before we lock in though, I would like to make a correction here. It seems that there is a resistance level just above the price action, especially given these touches here. I would like to see whether it can go this high, a little bit higher, because we have touches all over the place here. So it seems that the market is taking advantage. It was aiming for it even. I'm going to change the R1. I'm going to be placing it at 0.6980. So we maintain a bias for sideways movement, yet we have to note here that the price action has some slight bullish tendencies, given that despite breaking the upward trend line, note how it marks higher lows, higher troughs, and consecutive higher peaks. But I would require this peak to move in even higher and start breaking or testing, actually breaking, clearly breaking the 0.6980, given that the price action has already aimed for it on Friday. Should the sideways motion be maintained, we may see the price action remaining between the 0.6980 and the 0.6875. On the other hand, given also that the RSI indicator dropped, bounced on the reading of 50 and moved upwards, once again aiming for the reading of 70, we may see the bulls taking over, and in which case we may see AUD/USD breaking the 0.6980 and start aiming for 0.77. Feel free if you have any wishes on which trading instruments you would like to make an analysis on, and definitely should there be such a request, it will be relayed to me and we could make it. Let's have a look now at US stock markets, and I would like to see Nasdaq, which seems to be moving in a sideways manner, given that it has broken the upward trend line which was guiding it. Hence we tend to maintain a bias for sideways movement. Currently seems to be testing the 12,445 resistance line. And I wouldn't be surprised to see the price action revolving around this level. On the other hand, the red candlestick, which was in Friday's American session, tends to create some worries here. And I would like to see how the American session will open today in order to grasp the market sentiment. For the time being, though, we may see the sideways motion be maintained despite some slight bullish tendencies which are evident by the green candlesticks today and the RSI indicator, which has bounced back up from the reading of 50. Let's have a look now also at German stock markets. This is DAX 40. DAX, which has been moving in a sideways motion, rather tight range-bound motion, and that's between the 12,925 support line and the 13,360. Let's go hunting now for a new resistance line, somewhere here. That would be the, in red please, the 13,870. Let's make the readjustments. Interestingly enough, the DAX was not affected by Germany's adverse data release today during the European session. I would expect some movement here. It didn't. And it was characteristic how practically the EFO indicators both showed a rather pessimistic outlook for Germany's next 6 months. $125 and at 12,615. And at 12,340. There you go. DAX moving in a sideways motion, rather tight range bound. We may be seeing a mid-level being present here as well. That would be around the 13,180. So that should sum it up for the day. Oh, there's a last minute request to have a look also at Dow Jones. Give me a sec, please. Yeah. Dow Jones, which similarly to Nasdaq has broken the upward trend line guiding it and is moving now in a sideways motion, is actually right now just above the 13,955. We may see the price action revolving around this level. However, I would expect today's opening to provide a more decisive direction for the index. Should the bulls take over, I wouldn't be surprised to see it aiming for 32,760. While should the bears take over, we may see the price action aiming for the 31,445 support level. We cannot miss out on how similar the movement of the past 3 days has been between Dow Jones and S&P 500. Nasdaq is a little bit different, and it's understandable. It's more high-tech, and high-tech is most probably going to be bearing the grunge of the market should the earnings reports be adverse, especially given that we have Google and Microsoft, and Meta platforms in the coming days releasing the earnings reports. And also, should the Fed continue to, which most probably will, continue to tighten its monetary policy in an aggressive manner. So from all of us here at IronFX, best wishes for solid trading.
Hello, my name is Christina, and today we will talk about trading psychology. When you trade, psychology is very important. Feelings such as excitement, anxiety, depression, denial, and belief play a key role to your trading success. In many ways, it has been shown that the way traders feel affects their trading performance. Since it is difficult to erase our emotions, the best way to deal with them in trading is by controlling them as best as we can. More generally, the overall investor sentiment can affect how the market performs, which can be inconsistent with the actual market news and events. But let's see in more detail how psychology affects the market. The way traders understand the market has an influence on the market itself. For example, if macroeconomic data is better than expected or the numbers are disappointing, then the value of an asset will move based on how the market's participants felt about it. Sometimes, even if data is positive, the value of an asset might not move, since the market's participant expected that and had priced in it. Any trend in the market very often reflects investor sentiment and how traders felt about it at that moment. The general market sentiment is what will also guide them to buy or sell. If they believe it will go up, then it will buy and vice versa. If there is an optimistic view of the market, then commonly there is an upwards trend. On the other hand, fear is usually associated with a downwards trend. The market fluctuates, so do the traders' emotions. Traders may feel disbelief at the beginning of a trend and then feel hope for the market to recover. If the market goes up, then traders will begin feeling optimistic and then excited as they believe the rally will continue. If the market goes their way, traders may become greedy or euphoric. The opposite will also be experienced as the market starts to change and move downwards. At first, they might try to convince themselves then the fall is only temporary. But if it continues, then anxiety starts to settle in and perhaps denial, as they still may feel the market will recover soon. If the market remains weak, then traders may start to panic, withdrawing everything from the market and worried that they may lose what they have left. Finally, feelings of anger and disappointment will guide the market as it reaches further lows. Thank you for watching.
Okay, so welcome everyone once again to our webinar today. We will be doing advanced moving average strategies. We're going to go through advanced moving average. You guys already know moving average. This is the most simple form of technical analysis. I personally, when I just started trading, this is the first indicator I've ever learned, and you guys will be surprised. I paid quite a bit to learn this because I signed up for one of those crazy trading courses. Nowadays, things are free, like you guys joined this webinar for free, right? Yes, so back then I had to pay like thousands to learn the moving average. I know how ridiculous that sounds. Okay, let's do the disclaimer first. So just a warning, a reminder that whatever I share in this webinar should not be construed as trading advice. It should only be taken as educational. Okay, this is only an educational webinar. The whole point of this webinars by IronFX is to help you guys grow as traders. Okay, it is to help you guys grow as traders. Right, please don't take it. There's no signals, there's no forecasting here. Okay, if you guys are waiting for the entry, the take profit, the stop loss, you're not gonna find it in this webinar, because we can advise you when we think it's a good entry, but ultimately it's your choice. Another reminder, trading forex and CFDs carries significant risk and may not be suitable for all investors, right? So do be cautious, especially if you are new here. The risk multiplies immediately, especially if you are going on leverage or margin, right? So please do be cautious. For those who are new here, do not jump into the ocean without first learning to swim. Okay. For those who don't already know me, I think I've taken you guys once or twice before, right? For those who don't already know me, my name is Cass. I am an investment analyst and a prop trader here at Everest Fortune Group. So Everest Fortune Group, we're an award-winning research firm based in Singapore. We're a fintech company. Okay, what we do, we heavily research on strategies, back testing, and we advise the banks, brokerages, financial institutions, hedge funds on where we think the markets are going. So we do a lot of research on the characteristics of the market, where it's going, how it reacts, and blah, blah, and we try to find strategies to overcome that. And like today, we are going to share the strategy that you can use with moving average. Okay, so Everest Fortune Group, we've won we're the finalists for the best forex and best equity research for 2019, 2020, and 2021. Back to me, sorry. I personally am managing actually it's way more than 300,000 now. Okay, I'm managing quite a bit of funds, way more than 300,000 US dollars on my own personal account. That's me as a trader. I've passed FTMO twice, and I've passed my forex funds twice. So for those who don't know what these are basically prop trading tests that requires you to have a 10% profit within the month. Okay, so I've done that consistently month after month, and hopefully as I go with you in this webinars, I can show you guys how I manage to do that 10% every month. Okay, cool, everyone, cool for now. Okay, I'm gonna move on. Okay, so our agenda for today will be to understand what moving averages are. Okay, and then we're gonna look at some of the common moving averages out there. We're gonna look at two today, and we're gonna look at the natural moving average. So natural moving average is a kind of strategy, moving average that we use here as Everest Fortune Group. If you Google natural moving average, you won't be able to find a lot of information on it, because why? I think it's kind of a bit like it's something that we invented in a way, the natural moving average. Right, so this is because I was saying we spent a lot of time back testing and looking out for strategies and patterns on the chart. So we found that the natural moving average is a strategy that works very well on when it comes to trading. Okay, so just bear with me, we will get to the natural moving average towards the end of the slides or midway of the slides. And lastly, we'll be identifying reversals with the natural moving average. And if we have enough time, right? If we have enough time, we will be moving to trading view so that I can show you guys ultimately live examples of how this will work. Why? Because look, I love doing this webinars for you guys, right? It's a lot of theoretical stuff. It's a lot of textbook stuff, you know what I mean? So I can tell you what the moving average, the definition of the moving average. I can tell you the calculation of the moving average, blah, blah, blah. I can tell you so much about the moving average, but ultimately, if you don't know how to apply the moving average, it would still not be useful. You know what I mean? If I give you a pen and you don't even know how to do what to do with the pen, you don't even know how to write, that pen will just be absolute to you, right? So ultimately, we will try to go to TradingView if we have time to kind of apply the moving average and see how it works. Okay, so before I move on, can you guys just let me know in the chat box if any of you use the moving average to trade? Have you ever heard of it, at least, the moving average? No, no one? Okay, thank you, Lola. No one has ever heard of moving average. That's the most I try but don't understand. Okay. Yes, we got a lot of yeses. Yes, this is not unusual because, again, I said it's one of the most common indicators. I only look at it at a very basic level. Yes, me, myself, personally, I only use moving average on a very basic level, and I'll show you guys why later on towards the end of the webinar. Okay, so moving average, when I just started using it, I learned it very simple. Okay, if price, let me grab my pen so I can show you. So when I went for these crazy courses where I had to pay so much money to attend, the guy basically taught me that when price crosses above the moving average, you should get in for a buy. Okay, when the price goes below the moving average, you should get in for a sell. Okay, that's what I learned about the moving average. It works sometimes, doesn't work sometimes. Most of the time, it doesn't work that well. Okay, that's why you should never use, although today's topic is moving average, I must say, because like every week we'll go through different topics, right? Sometimes we'll go through moving average, Ichimoku, trend lines, support resistance, whatever it is. You should never use one technical indicator on its own to look for entry, stop loss, and take profit. It should never be only one to look for your analysis. It should always be a combination of all things to look for your analysis. And I want to use this example, which I am sure you guys heard when I took you the last time. It's the same as like you're going to a mall, you're buying a pink dress, okay? You see the pink dress, you don't know if it's good or not. So if enough people tell you that the pink dress is nice, you are going to buy it, right? But if everyone keeps telling you it's a no, you're not going to buy it. So it's the same as like you going to your dad, hey, does this dress look nice on you? And then your dad goes like, yes, it does look nice on you. And your mom says, yes, it looks nice. Your sister says, yes, it looks nice. And your brother says, no, it doesn't look nice. Okay. So similarly, when we're looking for trades and setups, we need different technical analysis to give us data and, well, not opinions, but more like analysis, right, of where those technical analysis think price is going. So if enough technical analysis is telling you that price is going up, you are going to get in for a buy. If enough technical analysis is telling you price is going down, you are going to get in for a sell. Okay, right? So moving average is just a tiny part of your entire analysis. Okay, it is maybe your dad. When you ask your dad, hey, is this dress nice? Moving average will tell you yes or no, it's nice or not. That means moving average will tell you it's a buy or if it's a sell. Okay, support resistance will be your mom. Okay, trend lines will be your brother. Okay, and so on and so forth. Okay, so again, moving average is just a tiny part. So let me explain what moving average is in a very textbook definition. Right, again, I'll go through all the textbook stuff, all the theoretical stuff with you, but ultimately you need to be able to grasp. Hey, Fauzan, welcome to the webinar. You need to be able to grasp how to use this indicator, the best way to use this indicator. You can know this in and out, but if you don't know how to apply it, there's no use. Okay, so let's go through the textbook definitions and all, a little basic backstory on the moving average, and then we will try to go into applying. Okay, so a moving average is a technical indicator that market analysts and investors may use to determine the direction of a trend. Okay, it sums up the data points of a financial security over a specific time period and divides the total by the number of data points to arrive at an average. Okay, it is called a moving average because it's a continually recalculating based on the latest price data. Okay, to put that in the most simple terms that I can think of, right? That is the most textbook definition you can think of. Let's say you see all these candlesticks, okay? If you put your moving average settings to 5, it's basically taking the price of the last 5 candles and dividing it by 5. So it's basically the average of the 5 last candles. If you put the settings at 20, it's the average of the last 20 candles. If you put it at 100, it's basically the average of the last 100 candles. That's why you can see most of the time the moving average is there a best moving average? You know, when it comes to technical analysis, I don't think there's ever a best of anything. It's whatever works the best on whichever time frame and whichever charts you are looking at. So I'll give you an example. There are certain pairs, there are certain forex pairs on certain time frames works well on a strategy that we have found here at Adverse Fortune Group. It's called the Nike Tick strategy. That's a totally different webinar. Okay, we found that that strategy works very well on gold. Okay, but that same strategy does not work very well on AUD USD, for example. Okay, so there's never a best of something. There's always which works best at that particular time frame and that particular pair and that particular instrument. Okay, that's why backtesting and research. I have to say, I don't think trading is hard. I think it's a very simple thing. You can probably teach it to a 12-year-old and they will be able to get trading. Like, what's so hard? You just buy and you sell, you put a stop loss in your take profit, right? It's not hard. The hard part is the time consuming part is actually backtesting and learning how to trade. That is the time consuming and the hard part, to be able to grasp and be able to collect all this data. Okay, so that I think is the harder part when it comes to trading. Okay, I hope that answers your question. So okay, let me continue with the definition of moving average. So analysts use the moving average to examine support and resistance by evaluating the movement of an asset's price. A moving average reflects the previous price action movement of a security. Analysts and investors then use the information to determine the potential direction of the asset price. It is known as a lagging indicator. Yes, moving average is a lagging indicator because it trails the price action of the underlying assets to produce a signal and show the direction of a given trend. Okay, I'll tell you guys, when I started using the moving average, I was not making a lot of money. This was when I just started trading. Okay, why? Because the moving average is a lagging indicator. It gives you information that is slow. Okay, so in the beginning, when I was losing a lot of money in trading, I was thinking to myself, this indicator is so dumb. Why is anyone even using this indicator? You're only right like 4 times out of 10 times or 3 times out of 10 times, whatever it is. And the times that you are right, you don't even make that much. When you lose a lot, okay, whatever it is. I was blaming the indicator. So now that I've learned as I grow as a trader, it's not that the moving average is completely useless. It's just like, maybe right now I find that I really love the Ichimoku cloud indicator, right? So to me, the Ichimoku cloud indicator is a Ferrari, and the moving average may be like a maybe a mom van, for example, maybe a van. Okay, so if you were to race, obviously the Ferrari is going to win, right? But it doesn't mean the van is completely useless. The van is still going to get you from point A to point B. It's just that the van is going to get you from point A to point B. It's more fuel efficient, maybe. It gives you more room. You can fit more people in the van compared to the Ferrari. So every indicator has its pros and cons, okay? So the moving average as well has its pros and cons, even though it is a lagging indicator, and we will look into that. Okay, so a moving average is a technical indicator that investors and traders use to determine the trend direction of securities. It is calculated by adding up all the data points during a specific period and dividing the sum by the number of times periods. The average moving averages help technical traders to generate trading signals. Okay, again, the general thumb of rule is if price breaks above the moving average, you are bullish. If price breaks below the moving average, you are bearish. But in this case, you can see how it didn't work out here. It wouldn't have worked out here because price was moving sideways. Okay, so that is the definition. The common moving averages out there. Today we are going to look at 3 kinds of moving average. One is, oh sorry, I don't know why I put the weightage moving average in there. We're not going to be looking at weightage. Okay, we're going to be looking at the simple moving average, which is the most common moving average out there, and the exponential moving average. Okay, so this is basically the calculation. When I look at it, I don't like, I know if I refer to my notes or whatever, I know what it means, but just one look, I wouldn't know, and that's totally fine. Again, more importantly is how you apply the indicator. More importantly, you don't know how your clothes are made, right? You don't know how electricity works, right? But you know how to turn on the switch, right? You know how to turn on the switch to use the electricity. So the same, this looks very complicated. More importantly, we need to know how this works, okay? So let's start with the simple moving average. The simple moving average is a straightforward technical indicator that is obtained by summing the recent data points in a given set and dividing the total by the number of the time period. So trader use the simple moving average indicator to generate signals on when to enter and exit a market. And SMA is backward looking, and it relies on the past price data for a given period. It can be computed for different types of prices. So for example, you can get it from the high, the low, the open, and the close, okay? In financial markets, analysts and investors use the SMA indicator to determine buy and sell signals for securities. The SMA helps to identify support and resistance price to obtain signals on where to enter or exit a trade. When generating the SMA, traders must first calculate this average by adding prices over a given period and dividing the total by the total number of periods. The information is then plotted on a graph. So the formula for simple moving average is written as this was a calculation. Let me go back to the last slide. This, so yes, this is basically a calculation, okay? It's basically, let's say you choose 5, right? Let's say you choose your period as 5. So let's say the first price was 1, 2, 3, 4, and 5. Okay, you add 1, 2, 3, 4, and 5 together, you will get 15. Okay, and then you take 15 and you divide it by 5, you will get 5. Okay, so that's basically how you calculate the moving average. It's just the average of the period that you chose. Okay, it's as simple. It's basically the name. It's just the average. And why is it called moving average? Because it's literally a moving average. Okay. So A is the average in periods, and N is the number of periods. Okay, everyone good? Gonna move on to the exponential moving average. Okay, so the exponential moving average, which gives more weight to the most recent price points to make it more responsive to recent data points. So the exponential moving average is not as lagging compared to the moving average. Okay, an exponential moving average tends to be more responsive to recent price changes as compared to the simple moving average, which applies equal weight to all price changes in the given period. When calculating the exponential moving average, the following 3 steps are used. Let me show you the calculation again. This is the one, C minus P times 2 over N plus 1 plus P, okay? Okay, so yeah, 3 steps that I use are, number 1, you calculate the simple moving average for the period. The EMA needs to start somewhere. So the simple moving average is used as the previous period's EMA. It is obtained by taking the sum of the securities closing prices for the period in question and dividing the total number of periods. Okay? It's similar to the simple moving average, but you take the price from the close. Okay. Number 2, you calculate the multiplier for weighting the exponential moving average. So the formula for calculating the multiplier is as follows. Multiplier equals to 2 divided by the selected time period plus 1. So for example, if the time period is in question is 10, the multiplier will be calculated as 2 divided by 10 plus 1. Okay, so the 2 divided by x plus 1 is fixed. I'll just quickly go back. I know this is, so 2 divided by n plus 1. The n is the variable that changes, okay? And then you'll get your answer. So the last step is to calculate the current exponential moving average. The last step calculates the current EMA by taking the period from the initial EMA until the most recent time period using the price multiplier and the previous period's EMA value. It is computed using the following formula. The current EMA equals to, okay, that formula I showed you guys a while ago. Okay, it's basically the calculations. So what is the difference between the EMA and the simple moving average? Okay, the main difference between the two technical indicators is the sensitivity that they place on price changes. So the exponential moving average tends to show more sensitivity to recent price point changes. This makes the EMA more responsive to the latest price changes. The formula for calculating the EMA tends to be complicated, but most charting tools make it easy for traders to follow an EMA, okay? In contrast to the simple moving average, applies equal weighting to all observations in the data set. It is easy to calculate, being obtained by taking the arithmetic mean of prices during the time period in question. Okay, everyone okay with the definition? The definition of simple and exponential moving average? Don't worry. Don't worry, when I just learned it, I'm just like, oh, this is so dry. Don't worry, okay. I was there once before. For those who are new here, for those who already learned this, right? For those who already learned this, you're just like, okay, I already know this stuff, right? Then it's how we apply it. Okay, so I'm gonna teach you guys the natural moving average, which is what we use a lot here at Everest Fortune Group, okay? Oh, by the way, if you guys are wondering why I'm from Everest Fortune Group, I probably forgot to mention in the introduction. It's because we have a special collaboration, okay? We have a special collaboration to bring you guys these webinars so that you guys can grow as traders. For those who are already profitable, more information to learn, just a different point of view. For those who are still learning and growing as traders, I'm happy to help you guys be even better, okay? So the natural moving average. When you go on Google, when you look for books on moving average, you always hear people saying, oh, the 100 moving average, the 200 moving average, the 50 moving average, the whatever moving average. My question is, can you guys, for those who use moving average, can you guys let me know what number or what settings for the moving average do you usually use? Is it the 50, the 100, the 200? I see Lola saying that she uses the 10, 60, and 200. Anyone else uses a different number? Okay, so Andrej, I hope I'm pronouncing your name correctly, uses the 50 and 100. We've got Kurt using the 50 and the 200 as well, only because that's what a video said to use. Okay, Kurt, I was using the 50 and 100 as well. It's called the golden cross and the moving average. Okay, right? I was using that as well because, yes, I saw a video that told me to use. Actually, no, it was from that course that I went, the one where I paid a few $1,000s to learn about moving average, right? That guy told me to use 200 and 100. I can't remember what it was. Okay, Philip uses the 15, Kingsley uses the 50, the 100 and 200, and Ola uses 7, 14, 89 and 200. Okay, very uncommon numbers. Okay, so as the answers are coming in, I see a lot of people saying 50 and 200. Why? Because this is commonly believed to be the best settings to use. Okay, I'm not saying it's not good settings. It's just that here at Everest Fortune Group, we have noticed that, I mean, think about it. Okay, think about it, right? Let's say you are going to a party, right? The theme of the party is Hollywood theme, right? You have this beautiful I know I use dresses as a lot of my references. Okay, you have a very beautiful you have a very beautiful mini skirt, for example, and very tall stilettos, very tall heels. That short skirt is something you usually use when you go clubbing, right? When you go to the club, you use that very short skirt or whatever it is. But today the theme is Hollywood. Okay, the theme is Hollywood. So you expect really big, gorgeous ball gowns, fancy wavy hair, whatever it is. Okay, the dress will not, the outfit that you choose, which is a short skirt and maybe spaghetti strap, whatever it is, does not fit the theme of Hollywood theme. Okay, it does not fit the theme. So therefore, it's the same when it comes to trading. We don't believe that there is one number that fits all charts and all time frames. So we actually, when you're using the natural moving average, we actually adjust the setting to fit the chart rather than the chart fitting the setting. Do you know what I mean? Right? I understand 50 and 200 is a very common number when you're using the moving average. I personally was using the 50 and 100, but the 50 and 100 does not work on all charts, and it does not work on all time frames and all pairs. So the 50 smoothen 10 LWMA low price. Is this okay? Is that a setting that you use, Henry? Right, so we've got different answers. So which one do we use? We have found that the best settings to use when it comes to moving average is to use the moving average that fits to the charts. Okay, so let me try to grab my pen. I actually tried to use a pen. I can't really find the pen. Okay, draw. I think this is it. Okay. Here. Oops. Just give me a sec. Let me just clear out. Okay. Can you guys see that this is what people usually use, right? People usually use the 50. When we look at the charts, the 50 looks like this, okay? The 50 looks like this, right? But you can see that there are times where price doesn't really touch the charts, okay? It doesn't really touch the charts, right? So a lot of times when we're using moving average, a lot of traders, okay, there's two very simple and known ways to use the moving average. One is when price breaks above the moving average, you enter for a buy, right? When it breaks below the moving average, you enter for a sell. Okay, that was one of the most common, the easiest thing, the most common thing you hear about the moving average, right? Okay, the other way is to, when price comes back to that moving average, the moving average itself works as a form of support and resistance. Okay, the moving average itself works as a form of support and resistance. So every time price comes here, the trader will look to get in for a buy here, look to get in for a buy. When it comes here, look to get in for a buy. It goes up, it comes back, look to get in for a buy. Okay, so that is the other way to use the moving average. Give me a sec. Okay, that's the two ways. So dynamic and support resistance. Yes, correct. That's correct, said Henry. Okay, Karim is asking what's the best moving average to trade on, the 50 minutes or the 1 hour? Okay, when it comes to moving average or any kind of technical analysis, again, I need to remind you guys that the best moving average that you should be using is the one that fits perfectly onto the the one that fits well on the chart and is effective on the chart. So I would say the moving average is effective on both the 15 minutes and the 1 hour, depending on the settings. Okay, it depends on the settings, right? It can work on all charts depending on the settings. Okay, so Let me just erase everything. Let me just erase everything. Sorry, I need to just give me a sec. Okay. Okay, so this is the 50 and this is the 46, right? Can you guys tell me, if you were to get in for the bounce, which charts would you prefer using? Just give me a while, Karim. I'll answer your question in a while. If you were using the strategy, right? If you were using the strategy where you wait for price to come back and you get in for a buy here. Every time price comes back and you get in for a buy here, which charts would you trust more, A or B? Would you trust chart A or chart B more? Okay, yeah, definitely the 46. But 46 is not a common number used for moving average, right? It's just a random number that we chose. Okay, I see someone saying B. Okay, actually why we choose A is because, remember saying the moving average works as a support and resistance, right? So every time price comes back to that support, you expect to get in here for that buy. But can you see here? This is the exact same charts, okay? It is the exact same charts. It's just that the settings was tweaked. The settings for both moving average was changed a little. This one, whoops, let me go back. This one is the 50 and this one is the 46, okay? We manually went into the settings and changed it to the 46. Okay, we manually went to the settings and changed it to 46, and we can all agree that the A looks better when we're looking for entries. Okay, A looks better when we're looking for entries. Why? This is the exact same chart. If we were to use this chart, if we were to use B to get in for a buy, right? Think about it. If we were to use B to get in for the charts, B didn't even touch the moving average and we would have missed this buy entry here. Whereas here on the A charts, okay, price nicely touched the moving average and you enter here for the buy. Okay, so this chart is more accurate. We can safely conclude that the A chart is more accurate compared to the B chart. So whenever we are using technical analysis, to make our decision making, we need to take note, okay? We need to take note that our only job as traders or analysts is to try our best to find the most accurate information, okay? To try our best to find the most accurate as possible information. And there's no black and white written anyway to say that, oh, you must use it this way, you must use it this way. The best way to use something is whatever way that you find is effective, okay? So we have found that this is the most effective way to use it, okay? Okay, let's, let me just remove all the drawings, sorry. Okay, bonus, combining moving average with other strategies. Sorry, this is not the one we're supposed to identify reversals with the natural moving average, and that is exactly the strategy that that is commonly used, which is to buy, get in for the buy. Whenever price comes to the moving average area, you get in for a buy. Whenever price gets into the moving average area, you get in for a buy, the support and resistance. Okay, so looks like we still have about 20 minutes. We can do the bonus, which is combining moving average with other strategies. Okay, so let's move on to the live charts, right? Let's move on to the live charts so that we can apply what we learned today, okay? Give me a sec, let me exit, let me share a new screen. Okay, can I check if everyone can see my charts? Okay, cool, everyone can see my charts, right? Since we're doing a practice, we might as well try to find a setup. Can you guys, if you guys have any requests for any particular pair or instrument, do let me know in the chat box, right? If not, I'm just gonna randomly choose one. Okay, I'm just gonna randomly choose one. Let's do maybe sugar. Okay, that's a really, any forex pairs? Sugar is a very uncommon Okay, I think sugar is a future, it's usually a future chart, right? Okay, let's see how well, maybe let's do GBP NZD instead. Okay, let's do GBP NZD instead. Let's try to do a forex pair, because one thing about the sugar chart, we can do it, but because it depends on the chart you use as well, right? This chart particular, I wouldn't want to use this because there's a lot of gapping. It's probably because it's not a 24-hour chart. This chart is closed. Okay, let's try to do GBP and ZD. I see a request on BTC USD. Would love to do that. I am a crypto trader myself. Okay. Okay. One thing about the moving average that you guys might want to know is that the moving average works very well on trending markets. Okay, it works very well on trending markets. You can see here that market is kind of going sideways. There's a little bit of a triangle going on, right? There's a little bit of triangle going on, but it works better when it is ranging. Okay, it works better when it's ranging. Okay, so there's two strategies that I will be showing you guys. The first one is to use correlation. Okay, look at the charts that we chose. We chose GBP and ZD. Okay, we chose GBP and ZD as the chart. So can you guys let me know in the chat box, do you know what pair is closely related to GBP and ZD? What forex pair is closely related to GBP and ZD? There is correlations with pair. It's the same with USD, the Canadian dollar, and oil. Why? Because Canada is a very big oil producing country, right? So the GBP is very closely related to, yes, thank you so much, Kurt. Yes, the GBP NZD is very closely to, number one, the GBP AUD, because the AUD and the NZD is very correlated. Okay, for those who are not sure, you can just go currency correlation strength. Okay. Just go to my FX book. My FX book is a good one. Okay. This is where you find correlation. Okay. Let's say you're looking for the GBP, EUR, actually the GBP NZD. Okay, the GBP NZD, when we compare it to the EUR NZD, EUR NZD, you can see that there is 89.6% correlation. It's very, very correlated, okay? Because the GBP is very related to the EUR and the AUD is very related to the NZD, okay? So one way we can use the moving average strategy is to use correlation, but then again, you can use correlation with a lot of things. How you do that, you see this plus button, right? You can plus, click on that, add the correlating pair, which is the GBP AUD. Okay, we're gonna add that in. This is not the one that I wanted. GBP AUD. Sorry, just give me a second. I'm trying to add in another chart. Okay, so you put it as new panel, new, okay, and it will show below it, right? It will show below it. Just go into settings and change that into, just change that to, I want to change this to a candlesticks pattern chart. Okay, these settings are tricky, it doesn't matter. You can see the price action going on here. Okay, now we're going to pull out the moving average. We're going to pull out a moving average. Why? Because this is our topic for today. So we'll be focusing on the moving average. Okay, on this, we'll be pulling out the moving average as well. Why isn't this coming off? Okay, guys, I think it's much better if I just open another screen. It'll be much faster if I just open another screen. Usually I can compare both charts. It's just somewhere in the settings that I don't see today. Okay, so one of it is GBP NZD and the other one is GBP AUD, right? Okay, we're gonna go into charts. I'm gonna get rid of this since it's not helping. And we're gonna see how correlated this pair is to each other. Okay, we're gonna see how correlated this pair is to each other. The more correlated it is, the more we want to use it. Okay. Let me get rid of this. Okay, again, this chart was not the best to chart on anyways. Okay, we want to see what is happening on both charts. We want to see what's happening on both charts. So this is the GBP AUD and this is the GBP NZD. You can see that from here, price broke kind of like the moving average to the downside. So naturally, you want to enter for a sell, right? Just using the moving average, you want to enter for a sell. But you can see from the past, every time it broke the downside, it was a fake out. It comes back and fakes out. It comes back and fakes out. So what can we safely conclude? It breaks here, it goes up, didn't really give you a good move, and it came back down, broke it. Okay, you would have been able to caught very small moves. What does this tell me when I'm looking at it? It tells me that the moving average doesn't work very well on GBP AUD on the 1 hour time frame. Okay, let's look at how it works on the GBP NZD. By right, price is supposed to break, go back. Every time it comes here, it's supposed to bounce off. It doesn't bounce off. It keeps breaking and keeps doing fake outs. It keeps doing fake outs, keep doing fake out. It means this is not an effective, moving average is not an effective indicator on the 1 hour on the GBP NZD and the GBP AUD at this current point of time. Okay, maybe in the future it'll work well, but at this current point of time, today, okay, today it does not work well. Okay, so let's quickly go and look at another pair, USD AUD maybe. Okay, and the USD NZD. Okay, I just want to quickly show you guys an example of correlation. Okay, the first thing I'm going to do is change this to the moving average, natural moving average. So how do you look for the natural moving average? What is the settings? I think someone was asking me earlier on, Karim was asking me, what is the setting? So we don't have a specific setting because again, we are adapting to the charts, right? We don't have a fixed setting, right? It's not 50, it's not 100, it's not 75, it's not 200. It is not a fixed setting. So the settings that we go for is usually using Fibonacci levels number. So the Fibonacci level, that is the 28, okay, the 28.6, the 32, the 50%, the 61.8%, and the 78.6%. Okay, so these are some of the Fibonacci numbers. We try to use this number and we see how well it works. Okay, so let's say we move it to the 28%. Let's see how well it moves. Okay, do you guys think this is a good number to stick on? Okay, price came here, it broke out, did a fake out, came here. By right, when it comes here, it's supposed to bounce. Comes here, it's supposed to bounce. Okay, no, I don't think this is very good settings. So we need to adjust the settings again. We need to adjust the settings until we find a good settings that works well on our charts. So let's try the 32. 32 is not a good one. 50. Okay, I think 50 will not work. Let's try 61. Nope, doesn't work very nicely. You want to find a setting where price was respecting for a while, and that is the settings you're going to be using. Okay, let's try maybe 70. Okay, I think 70 is not the best. Okay, again, I'm just randomly choosing number because I'm trying to find a number that fits well. The thing about natural moving average, because there's no fixed number that you should be using, you kind of just need to experiment and tweak the settings yourself. Okay, why do I think 70 is a good settings for AUD at USD AUD at this current point of time? Because why? Okay, you can see price broke here. It came here, it reversed. It came here, it reversed. It came back to the resistance, it reversed. Okay, so just using these settings alone, we can safely say that price respected these settings. Okay, only on the first time it finally broke. Okay, it broke, it broke, it broke. It came here. Maybe the settings can be tweaked a little to make the moving average go under. Okay, but that will take a bit of time. We don't have a lot of time left. So let's say I've tweaked the settings to a better number and price was nicely respecting this moving average. Okay, maybe the correct settings would be like 72 or 75, whatever it is. Okay, it comes and reverse here. It breaks this, comes, respected this, turn back, broke, came here, respected this area, bounce, broke, respected this area, bounce, and then it stopped respecting. Okay, so my whole point of showing you this is that you need, when it comes to natural moving average, you need to find the setting that fits well to your charts. Yes, it will take a bit of time to find the correct settings, but you can just randomly jump and hopefully land on one that works. You can start with 10, 20, 30, 40, 50, 60, 70, 80, and see which one works well. So let me try 80 to see. See, the more I adjust, the more nicely it moves naturally. Okay, the more nicely you can see that price came here, reversed nicely. This part doesn't respect so nicely anymore, reversed, reversed, and here it breaks. Okay, so if this continues, if this moving average, this natural moving average is still working good, we expect price to do this, come back and retest nicely here, and then we can get in for a sell. Okay. So the other way, how we use correlation, right? The other way, maybe I can try 88 because that is a Fibonacci level. At 88 doesn't work well. Okay, maybe it's a 70. 70 was probably the, or 80 was probably the best as of now. Okay, now we go to NZD USD. You pull out the exact same settings, which is the 80, and see if that works well. Okay, let's get rid of everything else. Trying to show you, okay, here price respected the 80. This part didn't respect, this part it respected, this part respected, it respected, didn't respect here, didn't respect here. Now it's not respecting. It just means 80 is not the correct settings for NZD, USD, NZD. Okay, that means we need to tweak it again until we find a better one. Okay, 100 is not the settings as well, maybe 120. Okay, 120 looks like a little bit better settings, right? It looks like a little bit better settings. We need to find the best settings for the charts. Why? Because we are using this to get our entry, right? You know what I mean? We are using this to get our entry. And how I'm using correlation. Okay, We only have 5 more minutes left, so I don't really have time to slowly look for the perfect moving average settings. Okay, it does take some time. Okay, let's say the moving average, I'm just going to draw a fake moving average. Okay, let's say you found the perfect settings. Okay, and it's respecting price. Okay, so why I use correlation whenever, okay, let's say I found the settings and this is the moving average that I think fits best. Why? Because price came here, bounce, came here, reverse, came here, bounce, came here, bounce, came here, bounce, came here, bounce. So when price comes to my moving average again, I expect it to bounce again. Okay, so why am I using correlation? Because if I expect price to bounce, it means that I expect price to be a buy, right? My bias right now is a buy. Okay, the bias right now is a buy. Okay, so now what I do is I go back to my correlated pair, which is the AUSD, AUD. Oh, by the way, the thing that we usually use is actually the AUD, USD, and NZD, USD, but I already typed it, so it doesn't matter. Okay, let's say we have found a very nice moving average to use as well. Okay, and it looks something like this. It looks something like this, for example. Okay, something like that. So when we're looking at the USD AUD, we are also biased that price is going to come here and bounce. Similarly to USD and NZD. So you're using the correlation on both the charts because, again, when you go to the correlation, you can see that they are, for example, 80+% correlated. They're 87.1% correlated. So the USD AUD and the USD NZD is a very correlated pair. So if your bias for one pair is a buy, the other pair should also be a buy. Okay, do you get what I mean? So that's how you combine correlation with moving average or any other indicator to confirm your bias. Okay, because you know, when I am trading, I think I have won half the battle once I have established the first question. So the first question I always have to ask myself, and I hope I get it right, is price moving in a downtrend or uptrend? Am I getting in for a buy or a sell? Okay. If you got the direction correct, I really think you would have won half the battle already. Imagine you think it's a sell, but actually it's a buy. It's a very, very long buy. So using correlation and moving averages, you are able to confirm, the direction that you want to get in on. Are you getting in on a buy or are you getting in on a sell? Okay, that's one. The second strategy that I'm going to show you guys. So the first one is correlation. The second strategy I am going to show you guys is the usual strategy that I use on a daily basis. One is to combine, right? Combine the moving average with support resistance, Fibonacci levels, the moving average, other indicators, and chart patterns. Okay, so the first thing I'm going to do is look for trend direction. I do see price moving on an uptrend. If anyone else sees anything else, do let me know. I only see price moving on an uptrend. In fact, it is moving in an ascending channel. Okay, it is moving in an ascending channel. Okay, now I am going to highlight some support and resistance. Okay, there is support and resistance here, right? There's support and resistance here. Okay, so right now looking at a channel, I am biased that price is going up. Okay, I'm biased that price is going to go up. Why? Because there is bullish momentum. 2, I think price is going to go up here. Why? Because there is a horizontal pullback level here. Okay, 3, why do I think price is going to go up from there? Because when I pulled out the Fibonacci, right, there was the 61.8 lining up on my support, okay, which is giving strength to my support. Okay, that's 3, why I think price is going to go up from here. 4, why I think price is going to go up is because when I pulled out the moving average indicator and I used the natural moving average and I adjusted the settings. Okay, guys, again, we don't have time to find the exact settings for these charts. That is just, you have to toggle with it, right? When I pulled the moving average indicator, there was a moving average here. So I expect price to move down here and bounce here. So the other strategy that I'm trying to show you guys is to combine the moving average with other technical indicators to get an even more accurate analysis. It's the same concept as the pink dress that you wanted to buy. You want to buy a pink dress, you don't know if it's good or not. So you ask your mom. Okay, your mom says yes, your dad says yes, it looks good on you. You ask your grandmother, everyone says it looks good on you. There's only one guy who says it doesn't look, it's your brother. Your brother says it doesn't look good on you. But you're thinking, so many people told me it looks good. I don't care what my brother thinks. I'm gonna get the dress anyways, okay? So right now we've got so many things telling us that this is a buy, right? You are going to get into this buy because there's enough reason to believe that price is going to bounce from here. Okay, so you use moving average with everything else, combining with everything else to get an even more accurate analysis. Okay, one thing you need to remember, you need to drill it very hard into your brain, deep into your brain, is that your only job as a trader is to find the probability of whether a trade will work or not. Okay, you want to get in here for a sell. You are now going to use technical analysis, fundamental analysis, whatever it is analysis you have, maybe your gut feeling, maybe whatever it is, whatever you can use to find how probable is price going to come here and reverse from here. Okay, using technical analysis, you will be able to narrow down or give yourself a rough percentage of whether a price is going to work. Because let's say you have established that an analysis is, oh, there's an 80% chance that this is going to be a buy. That means you get in, right? But you see, it's totally different. I think a lot of laymen have a conception that trading is gambling. It is not gambling. It is calculated, collected data and risk management. Okay, the difference with gambling and trading is based on very high probability. Okay, whereas gambling, for instance, you go into the casino, you play blackjack, it's a 50-50. It is a 50-50. Okay, you play roulette, it is a 48% chance of winning. Playing blackjack is a 50% chance of winning. Playing the slot machines is a, I don't know how many percent, maybe 3% chance of winning. Playing, I don't know what other games there is in the casino. I can't even think anything, okay? The probability is against you. Why? Because the probability is so low, chances of you losing to the casino is higher. The casino always has the upper hand to win you. But when it comes to trading and the charts, you get to use technical analysis and all these tools to narrow down how probable a trade is. If it's probable, get in for a trade. If it's not probable, don't get in for a trade. Save the money and don't get in for a trade. Okay, so that's all. Yes, I would agree. I really love poker. I think poker is a game of skills, right? I would agree. Trading is kind of like poker, right? I would have to say poker also has a lot of luck involved in it, right? But trading is maybe a lot more skills and research. Okay, so that's all I have for you guys today. I will catch you guys again. Thank you so much. I'm glad you enjoyed this class. I'll catch you guys again next week. Thanks for attending. Take care, everyone. Hope you learned something. Yes, more importantly, hope you learned something. That's the most important thing here. Hope you guys eventually will be able to grow your accounts into millions and millions. Okay, so I'll catch you guys again. Bye, guys. Thank you so much. Are you or Desmond